All right, everyone, good evening, and thank you so much for taking time off your schedule and investing it actually in yourself. My name is Anka Metcalf, and today I will be presenting the technical blueprints for creating big profits, trading only in the first 2 hours of the trading session. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities markets. I specialize in day trading the futures market, especially the futures indices, but I also trade commodities and bonds. And I do all my trading in the first 2 hours of the New York trading session from 9:30 to 11:30 or 12 o'clock. And then I am done. From that point on, well, it's only swing trading equities. I have been doing this for over 17 years, and prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I'm the designer of an institutional proprietary trading system, and the reason I'm the designer is I cannot take credit for technical analysis, but I have a unique way of simplifying technical analysis so we can identify patterns with ease and execute trades with maximum precision. My strategy is based on price support and resistance, but there is so much more that meets the eye because supply and demand, basic support and resistance created by pure price action from pivots, right? Pivot high, pivot low, that represents support resistance, represent only 10% of the equation that I look at. I also look at other layers of price support resistance, and in fact, I do teach 7 layers of price support resistance, and every single time when I take a trade, I look at where the price is trading and I compare it to where the price is trading in relation to my 7 points of price support resistance. I also have specific trigger times, and these trigger times I have traded for many years, so for over 20 years. So these specific trigger times are proprietary. They are, and I'm going to be sharing these trigger times with you guys today. And notice that if you're trading in your trading session, when you're approaching it, I will explain exactly how it works. When we are approaching these times become prone to buying or selling pressure. I also specialize on specific price zones, and what that means is that there are 4 price zones through the charts that are, again, prone to algorithmic buying and selling. These zones are perfect for buying or selling pressure, and they're also great for determining targets in a fraction of the time. Also, chart synchronicity and divergency. What a great example today. If you have been trading the market, you would have noticed that NASDAQ was weaker compared to Russell. Russell had relative strength. Therefore, the indices were divergent. We had more strength coming into the Dow, more strength coming into Russell. We had more strength into the mini S&P. And it was time for NASDAQ to take a break, which, by the way, was a leader for the last 2 to 3 weeks. Incredible strength. I also apply a strict set of trading rules and a 10-point scoring system that enables myself and my traders to identify trade with ease and trade stress-free. If you want to get a hold of us, you can go to our website. It is TradeOutLoud.com. And you can like us on Facebook. You can follow us on Twitter. And if you follow me on Twitter, I post every single day before the market opens at 9:30 the levels for free, all the levels that I am trading based on that current trading session. So you can visit them today. You could see our trades from today. You could see our trades from yesterday. You could see our trades for the whole entire week. And look at where the price is in relation to our breakout zones and our methodology. You can also visit us on YouTube. We have a lot of videos, educational videos, or LinkedIn. All right, so guys, why are we here? Well, the economy, as you know, over 30% unemployment rate. This is a huge, huge event. It is a black swan event into the market. And if you don't know what a black swan event is, I had a webinar on that, and you could go to our YouTube, and there's a black swan there. You could find it easily, and you could actually listen into more details as I explain how to trade the black swan and definitely what is the black swan event. So with unemployment rate so high, a lot of businesses are furloughing, right, employees. Definitely with all the businesses that close or are closed, right, all the restaurants, tourism industry, airline industry, basically everything that is out there is closed, right, except for the services in the retail, and that is in the food retail, right? When also hospitals, so unless you work at a Publix or a Kroger or a pharmacy, or if you are working if you're a policeman or a fireman, then you have a job. What other category actually has a job? Trader. The market never sleeps, and especially the futures market allows you to control your positions 24 hours a day. And we're going to talk a little bit about that as well. So learn how to trade and how to pull a paycheck out of the market is ideal. So why learn how to trade? Well, I would say, before this pandemic environment, I would say, hey, you can learn how to trade for your financial independence, to be in control of your money, to be in control over your life, to work from home, to customize your trading hours, to fit your lifestyle, to pay off your mortgage or your credit card debt, to pay off your student loans, take vacations, spend more time with family, make some time for you. But I think one of the most important reasons to trade is actually your protection for recession. It became my mission in 2008, where I used to live in Detroit, Michigan. Now I'm in beautiful Boca Raton, Florida. And 1 out of 3 houses in the subdivision where I lived, well, we still have a house there, so but we're only spending about a couple of months a year in beautiful Michigan. But 1 of 3 to 4 houses was in foreclosure. As you probably know, the big automobile companies are in Detroit, and they were laying out workers like there was no tomorrow. It was incredible. And I made it my mission. I was a trader then, and it was very sad to see a lot of companies go out of business. If you guys remember Linen and Things, if you guys remember Circuit City, these were companies that are not around anymore. So I made it my mission in 2008 to educate as many traders as I could. Back then, Trade Out Loud was not around. So Trade Out Loud actually became a company in 2010, and it became my mission. So from 2008 to 2010, it became my mission to educate as many of my friends as possible and acquaintances about how to make money into the market. And then I took it professionally on a different level as I was requested to share my trades, because I was making money into that recession in 2008. For me, 2009 represented a huge opportunity to buy stocks, to buy futures indices, to day trade and to swing trade. There are incredible opportunities that come from recession, incredible opportunities for traders. So I made it my mission to educate traders, and I have been sending out emails for the longest time: protect against recession, protect your portfolio, know how to create an income outside of your job. Just allocate a little bit more time, become educated, and guess what? Poof, coronavirus here. And we're in the situation that we are, and it is a great idea to start to learn how to trade right now, because trading takes a little bit of time. It doesn't happen overnight. So we are in an industry, and we belong to an industry where we profit in any kind of market condition. We are trading into a recession-proof environment. We don't care if the market is going up, and we don't care if the market is going down. We make money in bull markets, by going long, and we make money in bear markets by shorting the market. When the market is going up, and it has been going up for the longest time, right? Since 2009, we've been doing the QEs, we've been doing Brexit, and we had some volatile environments, but they were opportunities to buy the dip again. The easy money is made into uptrends where every pullback becomes viable. But how do you make money into a recession? Well, believe it or not, I'm going to share with you the portfolio, and it took me by surprise as well, because it was actually the best month, not only of the year, not only of last year, but it was my best month ever performing as a day trader into this recession market. Because as crazy as this Black Swan event is, it is incredibly, and it continues to be incredibly technical. And I'm saying incredibly technical. Did you know that the S&P 500 index retraced exactly to the 61.8 fib on the monthly chart? And from that point on, it rotated and continued higher to this very day, right? To this day, from this big steep pullback that the market had. So in a recession, country, and by the way, do you guys know what it is required to officially be in a recession? So you know that, if the market is downtrending for about 20%, if the market has a 20% pullback, then guess what? We're in a downtrend. It's a known fact. But did you guys know that we just need 2 consecutive quarters of declines in real GDP in order to be into a confirmed recession? And that could be devastating for the economy. A lot of jobs are never going to reopen. Think about all the jobs in tourism. Think about all the jobs in the airline industry. People are not going to be confident to travel. People are not going to be confident to book a hotel room. So a lot of jobs are going to be hurt by this. Plus, with everybody working almost from home right now, guess what? I think it's a matter of time before attorneys, before accountants realize that, hey, I don't need to hold that big office, right? Investment advisors, hey, why am I paying for this really huge office where I can trade from home and I can have my employees work from home? So you can see that it's going to be a domino effect. The retail, the real estate industry is going to go down with it. So there are a lot of factors to take into consideration. But for traders, recession means opportunity. You create your opportunity. You create your opportunity. Your next move is in your hands. And I want to start with this. Did you guys know how much money you need to retire? I mean, a lot of people don't know where their next paycheck is coming from, and we're already thinking about increasing our retirement fund, right? Well, here's the deal. Investors feel that they need an average of $2.5 million in retirement to maintain their lifestyles, according to a Legg Mason survey. Well, guess what? That's about $2.2 million more than the average balance of $385,000 those individuals had in their 401ks, IRAs, or other similar accounts. Yikes, right? So trading not only that provides you with an income potentially, because there are 2 styles, actually there are 3 styles of trading. There's day trading, and day trading is an income producing style of trading. What that means is that you begin with an amount in your account, you trade, and you place the trade and you exit the trade within the same day. So you have permanent access to your funds every single day. You can pull money out of your account. And this is actually how I trade my account. So I have my account, and every profit to the cent that I make that month, I withdraw. And of course, I put it in a separate account. And some of it, I put it into my investing account. And then there are 2 other styles of trading, and that is swing trading and investing. And I call it active investing. Obviously, this is not the time and place to start investing or even nibbling at anything, because we're way way deep into this coronavirus, and there are too many unknowns. And as you know, the market does not like the unknown. But what we can do is if we have a swing trading account or a longer term size account, we can use it for some swing trades. Now, you could go to my website. It is tradeoutloud.com. And if you go and hover under my trading room tab, over my trading room tab, you have a little tab that is going to be a drop down, and you have my day trading performance. And it dates from 2017, from the inception of our trading room. And also, if you go to the swing trading program, the stock swing trading program, it's right next to it on the right-hand side. And if you click on it at the bottom of the page, you see my swing trading results. I've had the swing trading, the stock swing trading program since 2010, and you can see the results right there. We trade with a structured approach to trading. We are not complacent. We're really active and hands-on into our trading. We teach and trade live every single day, a highly successful algorithmic level that enables us to profit from momentum moves. Guess when? At specific times, at specific locations, and at precise patterns, just like the algos do. Our methodology overrides news events, any artificial indicator, earnings, and dark pools. So let's talk a little bit about the futures market, right? So guess what? One of the reasons many traders gravitate towards the futures market is, of course, the relatively low startup cost, because it usually requires you about $30,000 to open a stock day trading account. And guess what? You have to maintain at least $25,000 to keep your day trading status, because if you lose a penny, then you cannot day trade anymore in that account. The futures market allows you to open an account with as little as $5,000. And best of all, you do not have to maintain that requirement, because as long as you have sufficient cash in your account to cover your margin requirements to trade the commodity or the index, because now we have micro indices available, you can still trade that commodity or the index, and you could actually have a balance of less than $700 to $800 and still be able to trade. So I think that's a pretty amazing market. I started trading, when I started trading, obviously as a retailer, I'm coming from investment background, and I switched into income producing style. I dove right into day trading, and I have been a day trader literally for the last 17 years. I have traded the stock market very successfully, but however, I found it very hard and very time consuming, and definitely very consuming. Why? Because there's a lot of work that goes into stock preparation before the market opens. So you have to analyze the major indices, right? So you have to look at the Qs, the SPYs, and then you have to build your watch list depending on what is in play that day, whether it's earnings and earning stocks, etc. So you have to do a lot of work for that, and then you have to select what you trade depending on relative strength and weakness. Why? Because you want to select a very strong stock, a stock that has relative strength compared to the market, because it has the potential to run higher faster. And of course, in a weak market environment, you want to select a stock that actually has relative weakness built into it. Why? Because it's going to fall faster, because it's all about instant gratification. And this is what I'm about. I'm about creating that instant gratification for myself and for my traders every single day in the trading room. We want to place our money into a trade that provides us that instant gratification. And indices are the same way. So one day I was still trading stocks, and I was wondering, it's like, hey, you know what? I do all the work for the indices. Why not just trade the indices? And I tried that for about a couple of months. And then I'm like, oh my gosh, I really like this. So I found another vehicle, because I was not trading futures indices back then, but I was trading commodities like gold and oil. I love to trade commodities. I always have. because you have 24-hour hands-on. You're not going to have any kind of surprises when the market opens because it's a 24-hour market. You can trade gold, you can trade silver, you can trade oil, you can trade RBOB, gasoline, you could trade copper, you could trade natural gas, you could trade whatever commodity you want, orange juice or the dollar or bonds. So literally you have a plethora, a universe that is very rich. And best of all, you do not have to wait for the market to open. You do not have to wait for the market to open in order to place your stop, because guess what? Events happen outside of the mirror trading session hours. And would you rather wait until the market opens at 9:30 and then you have no idea, is it going to gap up? Is it going to gap down? I mean, you're going to have a big surprise. If you trade the futures market, you don't have any surprises. Depending on your account size, you can trade full-size contracts or you can trade micros. So if you have a smaller account size, if you have $5,000 account size, you could go ahead and trade micros. You could go ahead and trade commodities. If you have full size, then you could go full size, full blast. Commodities and indices and mini indices are a fantastic vehicle, especially for small account holders. I have seen, and I have in my trading room and in my my students have started, some of them with small account sizes, and now they grew that account size 3 to 4 to 5 times just by using micros. So micros are a great vehicle to start trading. They're so much better than paper trading because you have skin in the game. They're great for scaling in and scaling out, and especially when you're swing trading. They're fantastic. Really, really great. I had a lot of traders and my students. We actually nailed the bottom. I'm going to show you some trades. And you could actually go through our portfolio and you could see we were the buyers in NASDAQ at 68.70. We were buyers in the Qs on the same day where we had the limit down in the futures. When we bottomed out that very day, towards the end of the day, we legged it long because we had a technical level and we had a really good grasp of formation and at the location and at the price location, and we went long. And we have fantastic profits into it. You can check out our portfolio. And it's great for swing trading. They're absolutely great. And a lot of you guys may think, hey, it's a micro. How much money can you really make from a micro? Well, take a look at this profit right here. This is Russell Micro right here. This was the entry for a swing into this location. And in fact, it was a bullish sandwich right here, the strategy that we traded. It was at the knot of the moving averages. So this was a really strong buy signal for us. Take a look, guys. This is one micro. One micro. All you need to have in your account is $500 to trade a micro. Okay? And here it is. Here it is. $531 into one micro. So you don't need to trade size. And in fact, I do have some slides that I'm going to show you that illustrate how much size I use, because I don't use a lot of size, but I go for the high velocity move. So I trade high velocity moves because we have price location where there's algo accumulation, and that punches the price higher. So why trade micros, and why am I speaking about micros right now? Because we're trading in a volatile market environment, and even if you have a bit bigger account size, guess what? You're still going to be trading micros because the stops are very wide. The stop represents the difference between the entry, the risk represents the difference between the entry and the stop. And risk levels are very elevated in volatility, and oftentimes all the trades that initiate in volatility are asymmetric. What that means is that there's not going to be a good ratio between your reward, your target level, and your risk that you are actually going to use for that trade. And because that is asymmetric, it's always a great idea to use half of your risk, because you're not going to be pressured to trail tight. And if the price wants to zoom up even more, you could trail it calmly. You have less pressure when you are trading less size. If you have like sweaty palms when you're trading, if your palms are sweating on your mouse, right? And if you're constantly mousing over that flatten button, getting ready to take the profits, you are oversized into that trade. Go down in the size. It's always a great idea in volatile market environments. The reason why I trade the sweet spot, and that is from 9:30 to about 11:30 to 12 o'clock, is because we have an overlap of the London session with the European session, and we have an influx in volatility. We have an influx in volume in the market, and typically we get pretty consistent continuation moves, especially when we're in very strong determined trends, or even counter trends, or even steeper pullbacks that we're actually doing right now. So the sweet spot is from 9:30 to 11:30. So I was mentioning earlier the difference between the stock market and the futures market. The stock market is open from 9:30 to 4 p.m. Eastern, 5 days a week. The futures market is open close to 24 hours a week, 24 hours a day, 6 days a week. So guess what? Geopolitical events are not going to wait for the market to open. Events happen in many markets that affect the U.S. market, trade outside of the U.S. market hours. So in futures trade, with futures trading, you can react as events unfold. Where in the stock market, you have to wait until the market opens because your hands are tied. What happens if you're an options trader? You have to wait until the market opens, right? Wouldn't it be awesome if you would trade futures instead of trading, let's say, options, or you could have an options account and you can have a futures account and you can combine. But trading futures, you're hands-on. You can play, if there's anything that is happening in the market at one point or another, guess what? You can actually place a hard stop where and if you feel appropriate. If you think that the price is going to go against you or conditions worsen, guess what? You can place the stop. You can take yourself out, or you can trail tighter. Okay. So why I day trade futures? First of all, I day trade 2 hours a day. I day trade futures, but I do prepare another 2 hours in advance before I day trade. I take all my intel before the market opens. What that means is that I do a lot of preparation. I look at the news. I see what's going on. Okay, so don't forget tomorrow we have G20 meeting, even though the market is closed. So that is definitely going to impact the market when it's going to open on Sunday. Also, on Monday, the European market is closed, so you're not going to see a lot of participation from the overnight trading session because the Asian session is the only market that is going to be open. And another thing that you need to know is that the Asian session is the only market that doesn't have algorithmic trading because it's relatively thin. And the algos are going to go haywire if you place an algo around in the Asian session. So I profit from the most volatile part of the day from the first 2 hours and trade only high odds, 75% and up trades. I get in and I get out super fast for instant gratification. I have a very keen eye on identifying really high momentum moves. And this is my income producing style and method. I also swing trade and invest the futures and the stock market because I am on chain from the computer. So from 12 o'clock when I wrap up my session and I wrap up my trading room, I just take a break. I'm not permanently in front of the computer. So I set alerts for my swing trades because I'm a super active. And if the opportunity is obvious and it's there, I take it. For instance, this week we have had a phenomenal run. We've only traded, I think, 5 stocks. The results are the portfolio results are on our website, and all of them winners. So why push for a lot of stocks? So my motto is trade less and make more money. Okay. So why trade futures? For those of you, and especially for those of you that come from the stock market environment, first off, you take a short position with these, there is no uptick rule. The second thing is that it has a really reliable volume, even in the overnight trading session. Should any of you trade from outside the United States, so if you're trading from Europe or Asia or Australia, you have really good volume even into the Asian session. You can trade major markets. And I'm going to share with you the major markets that you can trade and what you can day trade and what you can swing trade. Also, income and wealth, day trading and swing trading. So you can day trade it for income, and you can actually have a longer term account where you can swing trade. Tick values and price ranges. There's a tick value and a price range for everyone. So if you're trading, let's say the mini Dow, the tick size is $5, and it could go as much as $50 per point if you're trading the mini S&P, or if you're trading Russell. If you're trading NASDAQ, that's $20 a point. And notice that I'm not mentioning any kind of ticks here because I don't trade with ticks, right? I only look at the bigger picture. I look for points. I would not get out of bed to make 3 to 4 points every day. I would not, okay? The great thing about it is that it offers a great start to beginner traders by using minis or micros. Now, I know a lot of you guys may know about the fact that last year, the CME in 2018 on May 6th, they issued the micros that we talked about, and they're 10th of the size of the full size contract, 10th of the size. And with these really big size risk levels, guess what? A micro is fantastic. You take half the size of contract or even less, because position sizing is key for trading. You don't need to use a scanner. As a stock trader, I still use a scanner to this very day because it provides me with additional help in finding trades and setups. But guess what? It's another $270 that you don't have to pay. You don't need any special indicators. In fact, I urge you have really clean charts, no shiny, glittery indicators, no candlesticks that are blue or green or dots or anything along those charts. Just have really nice, clean charts. Pure price action is the way to go. So you don't need any special indicator. How many of you guys in here watch the show Billions? Okay, so if you're watching the show Billions, guess what? Bobby Axelrod, which is the main character, owns a hedge fund. Do you think that Bobby Axelrod is literally going to browse the internet and say, I'm going to look for the perfect indicator that I'm going to buy, I'm going to pay 25 bucks or $250 for, and I'm going to use it at my firm? Of course not. So these indicators are meant to suck you in. Literally. So the only people that are making money off indicators are the people that are selling them. So be very careful what you're buying. Okay, I have a lot of examples, a lot of traders that, even my traders, I have 2 traders that have tried indicators. They navigated away from our methodology. They were getting really way too comfortable. They spun their wheels for about 6 months and then they came back. They said, oh, the indicator didn't work. They didn't even want to tell me what was wrong, okay, and what they did, why they disappeared. Also, you have tax advantages. If you're here in the United States, you have the 60-40 rule that applies. And also, if you're in the UK, you have a plethora of advantages. There's no pump and dump. It is really safe from rumors. There's no manipulation, no downgrades, no upgrades. And it's literally a 24-hour market. It is a hands-on risk, HOR. It is a hands-on risk. You can manage your position. If you wake up at 4 o'clock in the morning, you could take a trade. If you want to go to bed later or at night at 1 o'clock, and if you want to take a look at the market, you can take a trade if the setup is there. So what can you trade? I specialize in the 4 indices, the Dow, the S&P, NASDAQ, and Russell, and this is my go-to every single day. So guys, it's really hard to miss a trade when you're only focused on 4 indices, and I'm going to show you my watch list a little bit later on. Really hard to miss a trade. I also trade pretty actively gold. And guess what? We have really great profits in gold. We took a trade in gold. I'm going to show you the trade of gold. We had oil, right? On the spike up in oil today, we were in. Okay, so these 6 charts are my go-to. We also had a trade in copper. We also had these other trades that are outside of the futures indices are more swing trades than day trades. So you can expect the duration, the living duration into a trade anywhere from 1 to 2 days to about a week. And in this market environment, trust me, it's more about 1 to 2 days. Okay. For those of you that are stock traders in here, okay, those of you that are stock traders, I want to share with you an example. Let's take, for instance, a trader that wants to day trade the Qs, right? And let's say hypothetically the Qs are trading at $212 and the trader needs over about $12,000 to buy 100 shares. And if the price is going to go up 50 cents, you're going to obviously profit $50 because each cent is a dollar. Versus a trader that is a day trader and trades the mini NASDAQ that's, let's say, hypothetically priced at $8,691. The trader needs only $8,000 to buy a contract. Obviously, as volatility goes up, the margin requirements are going to go up as well. But if the price goes up 50 points, you're going to make $1,000 because each point is $20. Let me show you what that looks like. All right, take a look at this trade. We entered the trade, and this was a pullback to the 50 SMA and price reversal. And we took this trade. You can see the entry right here at $233. You can see the price point right here off of the 50 SMA. This is a proprietary entry. We took it with 100 shares because this is how much we could trade with a buying power of $11,700. You can see the trade duration. You can see when we initiated the trade, it was 11 o'clock, and the trade duration was about 40 minutes. Okay, so we were in the trade, in the day trade for about 40 minutes. It was a little slower start to the day. And finally, we have some continuation higher. So the buying power was $11,700, and we traded with 100 shares. Guess what? That came up to a whopping $100, which is fine because that is $400. This is how much we can fit into the buying power versus NASDAQ. Now, take a look. NASDAQ, same pattern, right? So it's a pullback. So if I would cover the symbol and if I would cover the price, you would actually think it's the same chart. Let me go back. Okay, is the chart the same? Take a look at the moving averages. They're fanning out. Take a look at the price spike to the downside. Now let's go back to NASDAQ. NASDAQ buying power, 8,250. We took the trade using the same proprietary methodology, a buy off of the 50 SMA with the price rotating higher, and the trade duration as well, 40 minutes. We initiated these two trades simultaneously, okay, using the same methodology. The buying power used, like I said, $8,200, and we took it with one contract. So the trade duration, 40 minutes. So in 40 minutes, we made $790 in NASDAQ versus $100 using the Qs. So you can see the buying power right here, 11,000, and here it is, 8,250. I think that's pretty much self-explanatory. I also want to share with you a chart, and this is from 3/25/2020, and this is in mini NASDAQ, and you can see the entry price right here. You can see that I had three minis. This is the result from the 3 minutes, right? And the trade was still open. Okay, this was the result from the mini, and this was actually into the next. This was actually not into the next trading session. This was in this trading session. We took it right here at 72, right? 72, and it went higher. Okay, here's another example in NASDAQ, right? Same methodology, right? We're using 3/25/2020, one contract. Take a look at the result. Okay, take a look at the result. All right, here's another result. This is from a micro contract. This is a swing trade at 68.40. This is where we initiated the trade as buying the bottom. This is where we bought the bottom in NASDAQ. We also bought the Qs as a swing trade, the QQQ, and we also bought mini micro NASDAQ. Micro, guys, micro. Take a look. One micro contract. So if you have a small account size and say, hey, you know what? I'm going to move of making money really, really fast, and I'm going to use a full-size contract. That's the wrong approach, because you're not going to make money fast, but you're going to lose money fast because you're going to feel the pressure from the oversized position. How about go a little bit lower in size and you can hold it for a longer period of time? So isn't this awesome? Guys, these are results with micros. Okay, here's another example right here. And this is a full size, but this is a full size. One contract, you can see it right here at the entry, 68.48. This is from March. This is from March, guys. We bought the bottom in March. I'm going to show you this trade because we added on and we added on and we added on, we added on, right? So we scaled in, we started small. as the price is going for us, we're adding on. So we're not adding as the price is going against us, we're adding as the price is going for us, okay? Now take a look at the date right here. It is 3/24. Remember that, okay? So remember that first slide that I showed you, which was about $1,000 up. Now it's $5,000 up, right? Now it's $5,000 up. You can see it right here. Okay, these are real results from March. So you can see March 19th, 2020. Take a look at this. We traded oil, and we had a swing target hit in less than 2 hours. In less than 2 hours. And this results is with 3 contracts. You know why this gap here is, right? I guess you guys know. It's 3/18/2020. Remember the limit down? Guess who was on the buy side? We were. Take a look at the results right here. NASDAQ, $1,000 in a couple of minutes. Okay, so our concentration is about focusing on momentum moves and as the price escapes into tradable voids. This is what we do. And here we have identified a momentum trade that initiated at 10:30. Now remember this time, because I'm going to share with you the timing in the market tempo, and the trigger times that we trade on in the trading room, and it is my proprietary method. So 10:30 is the prime time trigger time, and it is also a reversal time, a really major reversal time. It's actually a minor reversal time in the market that is coming after a major reversal time at 10 o'clock. And you can see here at 10 o'clock, reverse, and at 10:30, it got ready to push higher. This is what I live for. And most of the trades that I trade are initiated around 10:30. They're finalized by 11 o'clock, and I'm done. Boom, done. You could do other things. So here you have the entries, 29.90, elevated residual volatility, triggered at 10:45 trades. The trades had achieved the trades and all targets, 3,000, 30, 20, 30, 40. You notice how I place my targets? So I'm not using ticks, right? I'm not using ticks. Potential profit 50 points. That's $2,500 a contract. This is how much we made here. We made $2,500 per contract. Here's another trade that we took on the same day, and this is in the Dow. It has 65% odds of success. This is our entry. We had an elevated risk because of volatility. The trade also triggered at 10:45 a.m. These are our targets. Potential profit 230 points. That's $1,600 per contract. There you have it, from level to level. Bam, and we're done. One more, NASDAQ. We identified the same opportunity. And sometimes when the market is in sync, it means that the market is not divergent, and you're having the same buying pressure and selling pressure that is coming at the same time and the same chart structure. It is fine to trade more than one index. And of course, if the market is divergent, you're just going to go with one index because of the high risk. So same strategy here. Notice that we had a huge move up of over 103 points until we trailed out. That's $2,060 per contract. And these happen every day. So you could come into our trading room. We actually have a one-day pass. If you go to the trading room, we could provide you with a one-day pass if you click there, and you can see what our trading room is all about. 99.9% of the individuals that do the one-day pass sign up for the yearly. They don't even go for the monthly. They sign up for the yearly because they love it. They love it. Why do you think an individual will love a trading room? Because we make money. And we're 100% focused only on discussing trading, and that's it. This is another NASDAQ trade. We had 2 levels of entry, one here and one here. You can see entry 1 and entry 2. And I'm going to show you what we show in our trading room for our clients. We had 2 contracts here, one at level 1, one at level 2. You see the size. Like, I don't even use a lot of size, right? This is the size that I trade with, $4,300, okay, total. Also, the Dow, this is a little bit, it had a tighter stop, right? So we used more size because the size of the trade is dictated by position sizing, right? Position sizing to your account size and to your level of risk per day and per trade. $1,100. Another trade here, this is level 1 and level 2. We went double on this one, $3,200. So I'm going to share with you some results and my win ratio for these trades. So if you have not made money in 2020, it's time to change something, because here's the deal. If you're doing the same thing over and over again, things are not going to change. That is just the formula for insanity. Einstein was the first to say it, and it is true. These are our 2020 results. This is January. Altogether, we have 37 trades, 37 winning. No, we have 37 winning trades. We have 8 losing trades, and we have 45 trades in total. The win ratio is 82.2%, 22%. I think that's pretty awesome. These results are per contract. These are not position size. If you throw one contract in each and every single trade, this is what you get at the end of the month. Okay, this is what you get. It's over $6,000. I think it's over $6,000 in January per contract. Now take a look at February. February started to ramp up, a little bit more volatility. Altogether, we have 30 trades. We have 26 winning trades, 4 losing trades, and our win ratio was 86.67%. That's pretty cool, right? Our total, one contract, realized profit per contract, you can see it right here. You have the portfolio on our website as well. You can see it right here, the total over $10,188 per contract. Take a look at March. In March was a very active trade for us. Altogether, we had 49 trades, only 4 losing trades, guys, and all that volatility. The worse the volatility and the crappiest market condition, the better I perform. You know why? Because it forces you to be even more focused into the market. It just creates this narrow focusedness, and you're like super determined to make money. 45 winning trades, 4 losing trades, 49 trades in total, 91.84%. And all trades are taken live in the trading room in front of live audience. And only these results are only in 2 hours per day. I don't trade a whole day. I only focus on the first 2 hours, and all these results are based on only 2 hours of trading. By contract right here, 26,777. Right? It's more than double, than triple, right? It's more than triple, than quadruple of what we made in January, right? Take a look, $6,000 in January, $26,000, over $26,000 in March. Very curious to see April results. Here they are. These are our April trades. So far, to date, okay, we didn't take any trades today. Guess what? Because we had a phenomenal trade in gold that was called yesterday. And guess what? It started to move last night at 3 o'clock, and it moved while we were sleeping. So when we woke up to profit. So like, why would you trade today? Because it was really a sideways crap day. I'm like, I'm not trading today. We did a lecture in the trading room. So guess what? Gold made a lot of money, $3,000 per contract. All right. So only for the month of April, we have already banked $10,000. So it's hard to lose focus. This is how my watch list looks like. So I don't have it on a piece of paper or a market miner or anything like that. No, this is my watch list. It's on my screen, one watch list, 6 charts, done. I trade the E-mini Dow, the E-mini S&P, E-mini NASDAQ. I trade gold, Russell, and oil. So it's really hard to lose focus when you're only trading 4 charts, basically, into commodities. Okay, now I promise you guys that I'm gonna tap a little bit about adjusting to the best time frames and about talking about best time frames. There is no best time frame. When you trade, and especially when you're day trade, your zip code is gonna be the 1, 2, 5, 15-minute chart. That's it. And those are your executional time frames. Before you get to that, you need to do your analytics. And analytics, you have to do your 1 hour, 4 hour daily chart, weekly chart, and monthly chart. You get all your information on your high velocity movements from those charts, and you create them here. Now, there's a trick to the madness. A lot of traders just select one time frame and go with that time frame till the end of times. No, what you need to do is basically at the open, you focus on the 2-minute charts, and you focus on the 2-minute charts for about 10 minutes to 15 minutes. If you do not have a setup that is lining up a pullback buy, a breakout, a sandwich, whatever it is, what kind of strategy you're using, if it's not lining up on the 2-minute, within the next, let's say 15 to 20 minutes, you switch the time frame to the 5-minute, because you want to cut the noise and you want to have just really evident price action in front of you. You don't want to see the noise. You want to see the clear signals from your candlesticks, from your charts. Where is your candlestick trading in relation to high low of the prior candle, high low of the pivot high, a high low of the pivot low. So you're doing your instant analysis. When you're trading, and if you're trading after 10:30 a.m. Eastern, move to the 15-minute chart. That is your zip code. You will have less stop outs if you're using the 15-minute chart. If you're using the tick chart, 2-minute chart, 5-minute chart, after 10:30, just watch your portfolio, journal your trades, and I guarantee you're going to have 85 to 90% of the stops right there. So if you want instant gratification starting next week, start using the 15-minute chart and wait for trades to line up at the prime time trigger time into 10:30 a.m. Eastern. Those are the best pullback buys you're ever going to find, and you're never going to find someone that is going to be so honest to give you a strategy in less than 2 seconds. Also, market timing. The market opens at 9:30, the market enters into a reversal at 10 o'clock and then goes into another shallower reversal if we are into an established trend at 10:30. 10:30 is the best pullback or breakout to take, or breakdown, obviously, depending on the trend. Patterns. The 2 patterns that you need to master if you're a beginner trader. Number 1, pullback buy or sell. You're only going to buy in a bull market. I never short in a bull market. And if you look in my portfolio, I don't know how many shorts you're going to find. Probably in 10 years, you're going to, not in 10 years, but if you look like this year and last year, probably like 5 shorts, because I made all my money long. Why? Because I'm trading in an uptrend. Look at your higher time frames. Can you tell me what higher time frames, what trend you were trading in? Monthly chart, uptrending. Weekly chart, uptrending. We had a weekly rotation that happened that pushed the market higher. Why would I go against that? Why would I short when the velocity of the move is for higher? Like I said, I don't get out of bed for 2 to 3 points in the in the mini S&P. The other pattern that you need to master is the breakout or the breakdown. You only buy the breakout above the range if your asset is into an uptrend, and you only short it if you're in a downtrend. If you respect these 2 very, very simple rules, you're going to make a killing in the market. Stop doing those wishy-washy kind of acrobatic shorts, okay? Don't do that. Execution times. These are the best execution times. I promise that I'm going to share them with you. 9:30 a.m., right? So the market opens at 9 o'clock, and you have about 5 candles into 9:35 on the 1-minute chart to establish a pattern. If you don't get your pattern at 9:35 and it's total chop, move on to 9:45. That is the second trigger time in the market. Sometimes the market tends to range between, because it calibrates from 9:30 till 9:45, and usually here at 9:45 you can expect a breakout. 10 o'clock. Remember, if you initiated a trade at 9:35 or 9:45, please take the profits as you're heading into 10 o'clock, because 10 o'clock is a major reversal time in the market. And if you're if you're having the trade that zips higher, okay, into 10 o'clock, don't feel the urge to jump into the trade at 10 o'clock or around 10 o'clock, because that's the top, okay? And it is poised to pull back. Now, depending on how steep or how shallow that 10 o'clock pullback is, your next entry is around 10:30. So watch the time like a hawk, okay? All right, so how do you prepare for the trading session? Well, first you check your economic releases, you check your earnings, you check your pre-market game plan, right? You check your levels, etc. You see how I have them color-coded. This is something that we teach in class. You zoom in on the technical execution chart, which is literally the 5 or 15-minute or even the 2-minute. If you are a very aggressive trader, you determine support resistance zones, you determine key trigger locations, determine relative strength, weakness, synchronicity, and divergency. And then if trading at all-time highs, then you need projections, right? And if you don't know where your above target zones are for your next measure move, then obviously you're going to be using fit projections for targets above highs. Now, let me share with you some charts. This is from yesterday, okay? This is from yesterday's price action. Okay, this is today's trading session, the white area right now. Take a look at the date right here. It is 4/9/20. This is where I took the snapshot. Okay, you see the purple line right here. It says bullish above. This was our entry. This bullish above area, guess what? It was present on our charts for the last 3 days. and it didn't trigger. We were there and we were waiting. So it's really hard to miss the trade when you have all this pre-planning ahead of time. Okay, this was our bullish above, this was our stop, so you don't get wiggled out because we're carrying the trade in the overnight trading session. And finally we got triggered here, which was about 3:15 yesterday. Okay, 3:15. And guess what? Oh, sorry, it was here. Okay, this is 3:15 yesterday. This is where we got in, and then it hovered. It didn't do anything all day long, and everybody in the trading was like, oh my gosh, this is so boring. It's like, okay, it's going to be boring all the way to the bank. Trading is boring, guys. Newsflash, if you're feeling really excited or if you're feeling anxiety when you're trading, you're doing something wrong, because trading should be really boring. Okay, so we finally got the breakout. Okay, at 3 p.m. Sorry, the arrow is wrong. It was right here. It was not here, so my assistant got it wrong. Okay, okay. This you see this peekaboo high, periscope high. This is our entry right here. It actually triggered while we were in the trading room. So guess what? Overnight, it punched in through the purple line again. It hovered again, and we took massive profits today. Massive profits today. Okay, take a look at GC, one contract. Ta-da! This is from my own personal account. Okay, this is from my own personal account. Take a look at the date. I took the snapshot today, 4 p.m. Okay, so a few hours ago. This is NASDAQ. Take a look at the NASDAQ trade. This is real result from my trading account. Okay, take a look at the date, 4/9/2020, $33,000. Take a look at natural gas. This is today's date, 4/9/2020. Take a look at the results and look at the size. I mean, I'm not trading humongous size. Okay, take a look at copper, one contract, $500. Okay, so the mini S&P 2669 for the entry, one contract. These are mini swings. Okay, these are mini. You could trade them with micros. With one mini micro, you would be up right now $587. If you have a $500 account size or a $1,000 account size or $5,000 account size, that would be your result. So learning how to trade is like learning how to drive. Literally at the beginning it can be overwhelming because you permanently have to keep track of your gas, your brakes, your mirrors so you don't crash. But once you get used to it all, you don't have to worry about it. And all you have to do is get to your destination. That's your only worry. So it becomes second nature, right? Trading is the same. You keep track of your entry, your stop, your market conditions, and your take profit or stop out. So once you get used to it all, it literally becomes instinctive. So wouldn't it be helpful to have someone that can teach you how to do all this? We teach a Power Income Futures Day Trading course. It is one of our award-winning courses. The number of successful traders that are in this course is 99.9%. If you're interested in joining the course, you could actually have one of the passes to the trading room and just ask it, just type it in the room. What do you think about the day trading course? And most of the individuals that are in the trading room, 90% are students of mine that have been with me forever. We teach the most powerful day trading strategies and patterns to exploit them for above average gains. So this is what I'm about, above average gains. We teach the 6 major disciplines for every trade, how to mathematically calculate the entry, the stop, the target, trade management, position sizing, and trailing. Because what is a trade without not knowing how to trade? Because guess what? You have a winning trade, and then all of a sudden you see your green in P&L. Sometimes you're not used to seeing that much green in your P&L. So you have to have a methodology, a trailing methodology, how to trail it emotionless, right? So we're taking the emotions out of trading. It's actually impossible to take 100% of the emotions out of trading, but we're trying to create a stress-free and an emotion-free environment. We teach you the market tempo, how to maximize your timing using key moving averages and other powerful indicators that are literally free, how to maximize gains and minimize losses using proper money management techniques. We teach you market timing, precise location, advanced technical analysis. So it is one day that we dedicate to technical analysis. It's like one day, all we talk about is technical analysis. What is included with this course? You're going to get it live. You have unlimited retakes. What that means that every time we have the class, every month we host a class, you come in for free, because it's impossible to absorb everything from one shot. So you come back and read. Most of my traders come about 20 times for the retakes, and they are the most successful traders. We provide you the manual. We provide you the platform layout so you don't have to rethink the unthinkable, risk charts, and much more that are going to help you to position size. We teach the course. Our next course, we just wrapped one last week. Our next course is April 27th to May 1st. And it is a 5-day live event online. It is from 2 p.m. to 4 p.m. Eastern because everybody's at home right now. We're offering you not 30, but 60 days into the live trading room because we want to get you guys going and start making money as you're learning. You can follow along, take my trades, you're going to make up for the course. And then we're offering you 1-day trading lab. We usually, this trading lab, we sell it for $1,000. We're going to waive that for you. We teach you how to place orders. If you're a newer trader, we teach you how to place the orders. We teach you how to place a stop, how to trail the stop into a live environment. So I do that with you in a live environment. We share the screens, we share the dome, we share everything. I teach you step by step how to do it. If you're interested in the class, you could go to our website. It is tradeoutloud.com/futures. If you have questions, feel free to email us. And if you want to hear the class curriculum, please email us and we will provide you all the details. And then again, if you don't want to hear from us back, that's fine. And the trading lab is May 5th. The class starts April 27th. And we're offering this bonus that is available only until Friday, April 14th by 9 p.m. Eastern. So if you sign up by Friday, April 14th by 9 p.m. Eastern, we're going to give you another 30 days in the trading room, and we're going to give you 1-day trading lab. All right. So thank you so much, Investor Expo, for having me here. Excuse me, having me here. And I wish you guys have a safe and happy Easter, happy Passover for those of you that are celebrating. And I'll see you in class, April 27th. Thank you so much.